What's up, guys? Good to have you here for our first group seminar slash Q&A. Today's topic is going to be trading pairs. We're going to be talking about mostly Bitcoin pairs, but this is going to apply really to any pair. A little background on this. A long time ago, actually, this was how altcoins were acquired. It might sound strange to people out there especially who are new to crypto, but stablecoins are not really old concept. They're relatively new. They did not really gain any popularity until, I want to say, 2018. And before stablecoins existed, people in crypto were very limited to what they were able to exchange for dollars. And so all the OGs of the space and people who have been in the space a long time are used to trading this way, and that's with Bitcoin pairs in order to get alts, because you couldn't just buy any given random coin you wanted with dollars or whatnot. You had to first buy Bitcoin and then trade Bitcoin for those alts. And when you wanted to cash out of those alts, you had to trade then back to Bitcoin and then, I guess, back to dollars. So this is the way that the majority of crypto trading in its history has been performed, which is, I think, a cool background. But it also gives you an insight to, this is how a lot of the older traders, this is how a lot of us think. And while dollar pairs are now pretty much available for every coin you can name, you have to think that there's still many people like myself thinking in this way. I think there's a lot of value to it. I'm going to explain it all tonight, hopefully. Here we go. So essentially, we live in a world where we're used to paying for things in what is relatively stable fiat currency, like a dollar. We're used to it being pegged essentially to 1. Now, what we're not really aware of is that fiat's value is actually fluctuating, and it does impact the price of goods that are valued in it. That's relatively invisible to us. Over time, we notice things like when I was a kid, a soda out of a soda machine was like a quarter. And that's going to be my old man story, isn't it? Now it's like $2. That's probably the biggest confusion here when we look at Bitcoin pairs. People say, how can we be looking at value between two things that are so volatile? The answer is these pairs right here. They're doing the work for us, and they're showing us how these two assets, no matter what they are, how they're correlated in value. And so 99% of questions that are going to revert back, well, what about the dollars? What about the fiat? The answer is going to be, it doesn't matter at all. Why would we use these? Why would we prefer these over trading in dollars? Well, I think that there are definitely advantages, and I think that what you want to use is also going to depend on your goal. So if you are someone who is looking for dollars, dollar pairs might make more sense for you, especially when it comes to selling. You're looking to accumulate dollars. You obviously then want to sell into the dollar pair. If you're someone like me and you're trying to just gain as much Bitcoin as you can over time, then Bitcoin pairs make sense because you can get a direct return in Bitcoin. There's actually a few other advantages of this that I will get into as I explain a little bit more about this. So here we are sitting in our Bitcoin pair chart. Let's make an imaginary scenario where we bought this wick right here at 0.3. Let's say we bought 1 unit. What that means is that in order to purchase that 1 unit, we paid 0.03 Bitcoin. It doesn't matter what coin you're looking at. What this is how much 1 unit costs in Bitcoin. So we acquired 1 unit of Ethereum here at 0.03, so we traded our 0.03 Bitcoin. In return, we got 1 Ethereum. Outside of that, this is actually going to function as a pretty normal chart. When it goes up from that value, you have profited. And if it goes down from that value, you have lost. That is the layman's approach. So as it goes up, your value increases, and as it goes down, your value decreases, the same as trading in anything. Let's say we got lucky, and this coin took off and moved to 0.06. What happened in this example is you purchased 1 Ethereum. The value of that Ethereum gained against Bitcoin. Let's say went all the way up here to 0.6. If you sell at 0.6, you now will get 0.06 Bitcoin back when your original investment was 0.03. So you've profited the difference between these, which is of course 0.03. And the advantage to this, you're skipping the fiat pair altogether. So one, if your goal is to accumulate Bitcoin, you aren't paying fees again to go from altcoin to dollars and then from dollars to Bitcoin. So that's an advantage of just bypassing a fee there. But the real advantage, in my opinion, is deeper than that. We're currently in a bull run. I think it's hard to deny. I don't know, people watching this in the future, I hope we still are. But the market has been trending up strongly for a few months. And in that time, what we've seen is the purchasing power of the dollar against Bitcoin dramatically is losing value. What took $1,000 to buy now takes $2,000 to buy. So in that sense, dollars are a very dangerous thing to be holding on to. An advantage of this pair as well, we're never jumping into these dollars. We're keeping our capital in crypto. The benefit of that is, well, it's going to continue to trend with the total market cap. You're really avoiding that volatility, and that's a big deal, specifically in the bull market. In a bear market, so from 2018 to 2020, dollars were actually, they would be the favored pair because pretty reliably, you'd be able to sell and buy back cheaper. But now that we're in a bull market, we can't really rely on that. And so any dollars that we're holding that are supposed to be part of our portfolio can basically be holes in our pocket. And what that does is it puts you in a position where you're very pressured. It's going to be difficult to have patience because one, you may never see a lower value that you're looking for. So say you sold something at $1, you were thinking, oh, it's going to go back to 50 cents. It may never go back to 50 cents. Now your only choice is to hold on to those dollars or buy back in higher. And I'd argue those are bad choices, both of them. This is, in my opinion, lots of people want to use leverage because that's their goal. Their goal is to increase how much Bitcoin they have. And there's advantages here. This can accomplish the same result as leverage. Leverage is trying to gain more Bitcoin. We can do that through here, but we get to avoid a lot of the negatives. You guys know I'm not a huge leverage fan. Don't hate it, but it's not necessary. And I think that this kind of trading can replace it and do in a much safer, less risk environment. Let's think of the other example. So we bought it at 0.3 and it goes down. Oh no, we made a terrible choice, right? Well, there's no call to action. There's nothing that forces you to do anything. You will have that 1 unit of this coin, no matter where this price goes, even if it goes really low. And so one of the strengths is we can simply wait. We aren't forced to realize a loss in this scenario. We may not be forced to realize a loss in the fiat scenario either, but it's going to be a lot harder because those dollars are going to lose value way faster than these pairs for the most part. Even if we made this bad trade in this scenario and it went down, our dollars are still likely gaining value. If total market cap is expanding and Bitcoin continues to hit higher highs, this scenario would just indicate that this one trade or this one position is just being outpaced by Bitcoin. So just because this is moving down doesn't mean we're losing dollars. It just means Bitcoin is moving up faster. So by that logic, a Bitcoin pair chart that's just completely flat, that would actually not be a bad thing. It's an interesting concept because this would imply that it is just equal. It is making equal moves to Bitcoin. So Bitcoin is increasing in value. This coin and its Bitcoin pair is totally sideways. It's just mirroring Bitcoin's growth. There's no forced action. There's no liquidation. I wouldn't necessarily recommend doing this with small micro cap new coins, unless you're being very careful about how much you're managing or your position. So let's talk about some of the other value this has. Say we're right here and over time this has gained value and we've taken some profits, and say we want to re-enter. Now we can do the same. We can do the same action we did on the way up, on the way down. We can layer buys down, and we can even layer them really, really low. We can be very conservative. We can call this fishing. We can go fishing for cheap coins. I'm sure a lot of you have seen crazy wicks on exchanges before, and this is how you catch limit buy orders. And the advantage here is, so, we can see price came down and it would have filled this one and this one and this one. But these two didn't fill, right? Price never went that low. If this were dollars, we would be in trouble and we would likely be buying back up here for a loss. But when we're trading Bitcoin pairs, instead of this being a bad thing, think about the scenario of this. You got to re-enter you layered, you bought some back at each one of these in profit. What is your punishment here? Your punishment for these not filling is that you're stuck in Bitcoin. Being stuck in Bitcoin is not a very bad scenario to be in during a bull market. If these are dollars, well, you're stuck in dollars and they're likely to lose 90% plus of their purchasing power. That is the real value here that I see in these pairs, is instead of being stuck in dollars, you're potentially setting yourself up to be stuck in Bitcoin. And in my opinion, that is a much more favorable position to be in while the market is bullish. If we zoom out on this chart, we can see, and this is true of virtually every coin, looks something like this. There is a large apex kind of explosion where altcoins hit high valuations against Bitcoin. That was right after 2018. We may say, man, returning to its highest point, that might be too much to ask. Might not be. I think it is very likely that most coins will retest their Bitcoin all-time highs, but there's not really enough data. But what I can say is, well, if we take our highs on these coins and we take our lows and we put our fib tool, we can look for values like the 0.5 retrace. We look for this on virtually everything, whether it's moving up or down, everything seems to return about halfway. So in this scenario, buying at 0.3, we can see that that is a 131% gain in Bitcoin. And from 0.03 on this pair, that's a 300% gain. So there is a lot of potential upside here. And what you have to think is this is return in Bitcoin. So 300%, that's amazing. But a lot of people are likely accustomed now to bigger numbers in USD. What you have to think is this is essentially 3xing what you've invested in Bitcoin. And so that 300% is likely going to be much higher actual value return. Truly, the entire market in Bitcoin pair looks like this. They're all very floored, and I think there is a lot of value there. You're keeping your portfolio exposed to the growth of crypto versus the inflation of fiat. You're not paying fees like leverage, maintenance fees to keep something open. You're not risking liquidation. Guys, I have over 100 altcoins. A lot of them are very small bags that I put very small amounts into. But to this day, none of them have died. They're all still traded somewhere. A huge advantage is being able to accomplish what normally leverage traders are trying to do, but removing the risk of liquidation or of losing Bitcoin. In these pairs, if we allocate correctly, meaning we take small positions, we're focusing on a majority in Bitcoin and then allotting certain percents in our portfolio to these altcoins, we have the ability to simply wait. We can just wait out downside. Instead of panicking, selling for a loss, we just wait. And nothing can push you to make an action or lock in a loss like leverage tools can with liquidation. And you're stacking sats. That's the biggest of the big, is you're increasing the amount of Bitcoin holdings that you have. So main points, the scale on the right is how much Bitcoin, 1 unit of whatever you're looking at, will cost you. I think that's a pretty good summary. Well, I hope I didn't miss anything big, but I think that's most of it.